Millions of Americans are losing their homes to foreclosure because they cannot pay the mortgage. Marilee Baby of Phoenix, Arizona is among the estimated 2 million whose homes have been seized by lenders.
It's just gone. You know, everything we did, every wall we painted, every plant, you know, we planted, the pool, everything we did, it's just not, it's gone.
Recently, President Barack Obama launched his $275 billion mortgage rescue plan to help homeowners in financial distress.
The American dream is being tested by a home mortgage crisis that not only threatens the stability of our economy, but also the stability of families and neighborhoods.
The Obama plan could help up to 9 million homeowners in two groups. One is made up of people who now owe more on their mortgage than the house is worth. Another includes homeowners who cannot afford the monthly mortgage payment. In January of this year, 1 in every 466 U.S. houses was already in some stage of foreclosure. That's according to Realty Track, an industry monitor. When foreclosed homes go on sale, they flood an already bloated real estate market. At the National Association of Realtors, chief economist Lawrence Yun describes the cascading effect.
Too many sellers, too few buyers, and home prices are falling. So if we can reduce the number of homes reaching the market from foreclosures, then they will help to bring stabilization in home prices.
Because there are eligibility limits to the Obama plan, not every homeowner in trouble will be helped. Sharon Price is an analyst with the National Housing Conference, a consumer advocacy group.
They're not going to be able to save everyone. There are still going to be probably millions of families that end up in foreclosure.
Under current law, homeowners facing foreclosure cannot go to court to declare bankruptcy and then change the terms of their mortgages. But Congress is considering rewriting the law so the judges would have the authority to work out a settlement or help people stay in their homes. President Obama supports these changes. The Mortgage Bankers Association, a trade group representing lenders, warns that changes in the bankruptcy law could have expensive consequences. The association's vice president, Francis Creighton, says international investors might be scared away from buying U.S. mortgages.
If you give bankruptcy judges the ability to change the value of the mortgage, then the international investor is going to require, in effect, a higher price for those mortgages going forward. It's either that or maybe they won't make those loans anymore.
Bankruptcy lawyers and consumer protection groups say the mortgages are often sold and resold to investors who either cannot or do not want to change the terms even when it is in everybody's best interests. The Obama mortgage plan is limited to people who live in their homes. Vacation homes or homes bought to generate income as rental properties are not covered. National Housing Conference analyst Sharon Price explains why there also needs to be foreclosure protections for people who rent.
Renters make up somewhere between 25 and 40% of the foreclosures that are taking place across the country. So an investor owns a property, they foreclose, the renter then gets evicted.
Some people apparently cannot pay their mortgages even after the terms are changed. A December 2008 U.S. government report said nearly 20% of the people who had their mortgages modified in the first quarter of last year were behind in their payments later. Credit Suisse, an international financial services company, has predicted that more than 8 million foreclosures are expected in the next 4 years. Jeffrey Young, VOA News.